Hello and welcome back to this channel. Ultimate Beginner's Candlestick Pattern Trading Course, Lesson 2. This video will demonstrate the easiest and effective way to prepare beginners to identify the high probability trading setup. I will show you my Triple T method to enter or exit the trading market and prepare beginners how to trade efficiently. I will also emphasize to show you where is the best entry place and prepare you to make profit from the stock market. Finally, I will show you trend reversal patterns graphically through candlestick mat blending. This way you do not need to memorize the difficult name of reversal patterns and formation. How to establish your trading setup? The first thing you want to know is what is your trend direction in a bigger picture. That's the first T, trend direction. So you go to a longer time frame like D1 and then install SMA 100, simple moving average, 100-day period. You can install 150 or SMA 200. That's your preference. Now, if the price is above the SMA 100, that means that the trend is uptrend, upward, and then look for long entry setup. If the price is below the SMA 100, that means your trend is downward, and look for short entry setup. The second things you need to do for trading setup is to identify what is trend obstacle areas. When the price moves up and down and hit one of these price rejection levels or areas, it will react to these levels and it may slow down, reverse its direction, or it may also enter these areas and consolidate for a while and then break up the resistance levels or may break down the support. These valuable areas or levels are as follow. Horizontal support and resistance levels. They're very famous. Fibonacci levels. Dynamic trend line. Dynamic moving average. Wedges and triangles. Channels and WD gun and so on. There are so many exist, but these are the most important one that you should be familiar with. Now that you identify the trend direction and trend barriers or obstacles, you need to identify the tradable entry signal. Now you have to go to one step lower time frame while respecting the longer time frame direction found in T1. Look for well-known reversal patterns and formations located in barrier area, in T2 area. These patterns could be hammer and shooting star, bullish and bearish engulfing, tweezer top and tweezer bottom, bearish abandoned baby, bullish and bearish harami, morning and evening star, upside gap, two cruise pattern, and so on. There are so many, hundreds of patterns and formations, and each one have their own rule and instruction to follow. I wish they would put at least singing cat and flying chicken. What I mean by that is so difficult to remember the name and also their rule to follow. But here one thing, if you use candlestick mat blending, you do not need to memorize these complicated patterns and formations or their name at all. In my next slide, I blend some of these patterns to refresh your memories. The reason these patterns are so important as entry trigger because the outcome of blending these patterns are nothing but bullish or bearish hammer or inverted hammer. Let's look at some of them. How to blend tweezer top and tweezer bottom reversal pattern. Let's assume this is a bearish candle with H1 time frame and we want to blend it with a bullish candle with H1 time frame. The rules are like this. We take the open of the first candle, we take the close of the second candle, we take the portion between open and close, and then we take the high and a low of the pattern. And the outcome is going to be a bearish hammer with H2 time frame, and this is bullish tweezer bottom reversal pattern. Let's assume this is a bullish candle with H1 time frame, and we want to blend this one with bearish candle with also H1 time frame. We take the open of the first candle, we take the close of the second candle, we take the portion between open and close, and then we take the high and the low of the pattern, and the outcome is going to be a bullish shooting star with H2 time frame, and this is bearish tweezer top reversal pattern. So you see we blend two patterns and the outcome was nothing but hammer or inverted hammer. How to blend bullish and bearish engulfing reversal pattern. Let's assume this is a bearish candle with H1 time frame and we want to blend this one with a bullish candle with H1 time frame. Again, we take the open of the first candle, we take the close of the last candle, then we take the portion between open and close, and then we take the high and a low of the pattern. The outcome is going to be a bullish hammer with H2 time frame, and this is bullish engulfing pattern. Now let's assume this is a bullish candle with H1 time frame and we want to blend this one with a bearish candle with H1 time frame. We take the open of the first candle, we take the close of the last candle, and we take the portion between open and close, and we take the high and a low of the pattern, and the outcome is going to be a bearish shooting star with H2 time frame, and this is bearish engulfing pattern. How to blend morning and evening star reversal pattern. Let's assume this is a bearish candle with H1 time frame. This is a bullish candle with H1 also time frame, and the third one is again a bullish candle with H1 time frame. Now the rules are still the same. We take the open of the first candle, we take the close of the last candle, then we take the portion between open and close, and then we take the high and the low of the pattern, and the outcome is going to be a bearish hammer with H3 time frame, and this is morning star reversal pattern. Let's assume this is a bullish candle with H1 time frame, and this is a bearish candle with H1 time frame, and the last one is again bearish candle with H1 time frame, Then we take the open of the first candle, we take the close of the last candle, we take the portion between open and close, and then we take the high and a low of the pattern. And the outcome is going to be a bullish shooting star with H3 time frame. And this is evening star reversal pattern. How to blend upside gap to cruise reversal pattern? Let's assume this is a bullish candle with H1 time frame. This is a bearish candle with also H1 time frame, and this is the third one is a bearish candle with H1 time frame that engulfs the prior one. We take the open of the first candle, we take the close of the second candle, and then we take the portion between open and close, and then we take the high and a low of the pattern, and the outcome is going to be a bullish shooting star with H3 time frame. You see, so far we have blended 7 well-known reversal patterns, and the outcome was nothing but bullish or bearish hammer or inverted hammer. And you didn't need to memorize their name or their instruction and go through all those complications. This is upside gap to cruise reversal pattern. This is price trend Air Canada stock D1 time frame. I installed a simple moving average with 100. That's the first thing that you have to do in order to see the direction of your trend. You see now that the trend is above the simple moving average 100 period, and that's a good indication that the trend is in upward direction. So that's the first thing. The second thing is you have to install your barriers, and I install here dynamic trend line, and or here it acts as dynamic support. And you see there are so many touches, that's so many price rejection here, and these are a very good entry point, which is the third thing that you have to look for. We have to look for patterns and formations to enter the market, because you want to go with the trend. The trend is upward and you have to enter the trade, not exit the trade, enter the trade. So you have to find the entry point. Now, in order to find the entry point, you go to one step lower time frame. Here is D1, so you go one step lower, it's H1 time frame. You go to an H1 time frame and you find some patterns and formations that you can enter the market, or if you do not know those patterns, you can blend. I show you a couple of examples. You can blend those patterns and you find your entry point and you put your stop loss 1 or 2 ATR below the barriers that you draw already, whether horizontal support and resistance, whether dynamic trend line, moving averages, and so on, that I explained in a couple of slides earlier. And you enter the trade and you make money. This is the price trend Air Canada stock D1 time frame. I installed the simple moving average 50 to check the direction of the trend, and you see the trend here is above the simple moving average, and that's a good indication that this trend is uptrend. And this portion, the same thing, is an uptrend, and in this portion the trend consolidate or in range band, and so moving average it doesn't follow range band very good. So that's the only thing is we can find from moving average that the trend is in range band, because when the trend is in range band, moving average shows flatten and moving sideways. So that is a good indication that the trend is in range bound. Now, so the first thing, we have to find the direction of the trend, and the second thing is we have to draw our barriers or our obstacles. These are the support and resistance that we draw. So now, in order to enter the trade, which is our next T's, now the trend entry points. Now you can do two things. You can go to one lower time frame. Here this is H1. This is D1. You can go to H1 time frame and find those patterns and formations in order to enter the trade. Or you can do here, like for example, this is a hammer. That's a very good price rejection by the support. You can enter the market right here and you put your stop loss below the support and you ride on this trend. This is a shooting star. You can exit the market here, so you can benefit from this swing trading. And this trend is going to go way up, and here there is another price rejection. Then you can exit the market. Now another thing is here that if you blend these four candles, you want to know the outcome of these four candles. The outcome is a bearish hammer. That's the sign of a trend reversal. So the trend from range bound, it goes up. So you can enter the market as soon as you see this candle form and it be above this candle. As soon as this candle form above this bullish candle, you can enter the market, and you see that how big uptrend you will have. So you get the benefit. And at the top, this is resistance and price rejection, and this is inside bar. An inside bar indication is an indecision. So that is a very strong uptrend, and suddenly you come to indecision. What does it mean? It means that the trend is slowed down or near reversal. You see that the trend reverses, but you see you have to wait for this confirmation candle that opens below this candle. As soon as it does, you can exit the market, and you see that the market is going down. So basically, this is how you set up your trading, and you first check the direction, second the barriers, and third you use all those patterns and formations and candlestick blending in order to find the entry point. So and make money from the stock market. This is the price trend Air Canada stock D1 time frame. I installed a simple moving average with 50 days period to check the direction of the trend, and you see this portion of the trend is above the simple moving average, above this dynamic support, and also this portion, the same thing, is above this simple moving average. So basically the trend is in the uptrend, except this we have a price rejection on the dynamic support level. So now this is the first thing that we have to do, is to check the direction of the trend. And the second thing that we have to do, we have to install the barriers. Now these are the barriers which it acts here as dynamic trend line, and you see that it has almost three touches and three price rejection. Now the first price rejection, now that is the third part, is to how to enter the market. So we have to look for patterns and formations in order to enter or exit the market. Now here you see a shooting star, that is the sign of a price reversal. So if you have already in the market, you can exit the market here. And also, this is again another price rejection here. So the trend is going up all the way, and it rejected by this dynamic trend line as a resistant level, dynamic resistant, and the price is basically its reverse its direction. Now, if you want to know if you can verify it with candlestick matte blending to see what kind of pattern is that. Now you see I blend these three candles, and when you blend it, the outcome is nothing but a shooting star. That is a very, very valid price reversal. Now the price come here, and here we have some candles that they are in consolidation and range. So we can also blend these candles between these two arrows. There are 10 candles. If you blend these 10 candles, you want to know what is going to be the outcome. The outcome is nothing but a hammer. That's a good indication that there is a big probability that the trend is going to reverse, which it did already reverse. So the only thing is you have to wait for the confirmation candle. This is a confirmation candle. As soon as you see this confirmation candle, you can enter the market and you put your stop loss below the SMA 50. And you see that the trend is going to go up all the way. And again, there is another price rejection here. Now let's see what is that price rejection is. Oh, that is inside bar. There is inside combo bar. And so that is the sign of indecision. So this is a very strong uptrend, and suddenly it comes to indecision. It means that we are close to reversal, the price reversal, and the price reverses. It did already, and then you have to wait for the confirmation candle, which is this one. And as soon as you find this, you can exit the market. So, or you can also go to a 1 hour time frame and see again some patterns and formations, and you can use also candlestick matte blending in order to find the exact location that you enter or exit the trading market. This is the price trend Air Canada stock D1 time frame. Each candle represents 1 day of trading. Now I installed also SMA 50 with 50 days period to check the direction of the trend. Of course, you can use SMA 100, 150 or 200. That's your preference. To check the direction of the trend, and you see that the trend is above the SMA 50. So that means that this trend is upward. That is an uptrend. Now the second thing that you have to install your barriers or your obstacles, that is the area of values. Now if you install your barriers, you see that this is a dynamic trend line, and that is here it acts as a support area or support levels with 3 touches. Now these we use these touches in order to enter the market. These are a very good price rejection, and let's analyze the trend in terms of the patterns and formations. Now the trend here is going upward. If you are already in the market, probably you can exit the market here, and you know why? Because there are almost 5 candles. That's 1, 2, 3, 4, 5. And if you blend these 5 candles, we have to know what is going to happen. These 5 candles, and if we blend it, we get a shooting star. That's beautiful. So that is the sign of a price reversal. So you can probably exit the market as soon as you see the price it's closing a bit lower than this candle, and also the price coming down all the way there, and look, there's another price rejection right here. See, what is this? That is again a hammer. That's a sign of a uptrend reversal. So the price basically move up and have a little pullback and shoot up all the way. Now, if you already entered the market, then you can exit around this area. That is the shooting star. You can exit the market here, and you see the trend is going down, way down, and again another price rejection right on the support level. And here you have a hammer. That is again the price rejection and price reversal. Now, so the main thing is, first you have your price trend, and then you have to install your moving average in order to see the direction of the trend. Second, you put your barriers. You install whether trend line, dynamic trend line, or moving average, or support and resistance levels, or Fibonacci, whatsoever that you like, that I explained before. And then the last thing is, look for patterns and formations in order to a sign of patterns and formations that you can enter the market and make money. Now here, this is a very, very good and good videos for beginners, especially to prepare themselves in order to start going in the market and make money. In our next video, we are going to again continue in the same direction in order to give you more informations how you set up your trading, your trading, and I try to increase your knowledge in order to make a better trade or a successful trade. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.